You'll have to forgive us that indulgence, I'm afraid. We are in a cinema, so we thought we'd play up to the theme. Thank you so much for joining us in such great numbers, as always, here in Newcastle and up in the Northeast. My name's Joe. I'm General Manager of FinTech North. I just want to spend the first 5 minutes or so explaining a little bit about the work that we do at FinTech North, introducing our organisation to those of you who haven't been to a FinTech North event before. For those of you who are well and truly used to our events and part of our community, welcome back. It's awesome to see you here today. So I'll just do a little bit of housekeeping right at the start. There is Wi-Fi. The password is just Tyneside, all lowercase, if you do want to get onto the internet on your phones. There's no fire alarm scheduled for today, so we do have fire exits to either side of the stage and obviously back out through the main entrances there as well. Few thanks that I want to say as well, a few words of thanks, of course, to the FinTech North team, to Rachel for coordinating the event and bringing you all together, to Ryan for promoting all of our events and engaging you all, which is awesome. Huge thanks to Dan and Julian, my directors, as well, for all of their support. And of course, Chris Sear, our chairman, who's with us here today. Can we have a round of applause for the FinTech North team, please? And of course, our brand sponsors. Without these organisations, we would not be able to bring you all together. I want to say a huge thank you to Atom Bank, to Invest North East England, to MasterCard, and to Innovation Super Network. And we've also got the support of some other great organisations. Innovate Finance, for obviously promoting the conference and bringing the whole of the UK sector together. So Peter's here today. It'd be awesome to hear from him later on. And of course, Galibier, our awesome PR partners. For anybody interested in their support, they've got a desk in the networking space and upstairs. So yeah, please go find them. We'd be happy to introduce them to you. And finally, Google Cloud as well. Karen and the team at Google, who supported our pre-conference get-together last night. So again, without the support of these like-minded organisations, we wouldn't be able to do the work that we do supporting the ecosystem. So as I said, my name's Joe. I help to run the FinTech North organisation, keep you all engaged, keep you all interested in what's going on in Northern FinTech. As an organisation, we exist to bring the sector together, to support the development of the sector. We also exist to make sure that that development is aligned with what's going on in the UK as a whole. And we make sure that we do all of that in a neutral way. We don't promote any one city or geography as the capital of FinTech. We try and promote the North as one region because we believe that the combined efforts of the North are greater than the individual cities and the individual geographies. And actually, if we promote the North as one region, we can compete on an international stage with other super hubs around the world when it comes to our FinTech sector. I mentioned how we do our work. We need like-minded organisations to come on board, take a partnership, take a sponsorship to help us in the work that we do. So just to put this graphic up on screen, this is the best visualisation, I think, of the work that we do at FinTech North. All of those big picture objectives and values, this really brings it together. This is how we achieve those, primarily by bringing you all together face-to-face to build relationships, to share best practice, to talk about FinTech and share ideas. So yeah, it's awesome to see you all here today, and I'd implore you all to be collaborative, be supportive in the networking. I think we've got over three and a half hours of networking today, so we know that that's what you guys really value, but really looking forward to the content as well. I mentioned our partners. These are just some of the like-minded organisations that we work with across the year. If anybody's interested in working with FinTech North and supporting us in the work that we do, please have a chat with myself, with Ryan, with Rachel, with any of the team. We'd love to explore getting you involved in an event or a future initiative. So FinTech in the North, just want to give you an idea of what's going on. Obviously, we're here in the Northeast today. But if I just give you a bit of a tour from west to east, right across the North, there's probably about 400 FinTech firms, give or take, in the north of England, which, for the avoidance of any doubt, is everything south of Scotland and north of Sheffield. Some people do need that as a lesson, I'm afraid. In Liverpool, we see a real strength in wealth tech and insurtech. A lot of these specialisms do relate back to a city's past prosperity and industrial heritage, which, as a proud northerner, I find fascinating. Manchester, for example, Greater Manchester, long a centre of retail and textiles trade. Today, payments and e-commerce index really highly in Greater Manchester. In the Leeds City region, which is where I'm from and where FinTech North started, banking, lending, and regtech index really highly. And up here in the Northeast, there's a real innovation corridor between Newcastle and Durham. Payments indexes really strongly up here as well, and we've got some fantastic scale fintechs like Sage and Atom Bank, some awesome scaling fintechs like Canny, and of course some awesome public sector organisations, HMRC and HM Treasury are based up here as well, so that payments expertise comes through really strongly. The sector in the north generating probably about 2 billion GVA every year for the UK economy. That's out of about 11 billion that the sector generates nationally. And if the north was an EU economy, it'd be one of the ninth largest in Europe, and it'd be a top 20 global economy as well. So our patch is vast, and it's up to us to shout about it and get you all collaborating, which is part of what we're here to do. Just a few words on our strategy for the year as well at FinTech North. I often get asked, where are you taking FinTech North? What's the North Star? What do the next few years look like? We've expanded our team recently, bringing on board Rachel. So we've now got 3 full-time employees. We've also got Silas working with us on our skills initiative as well as an intern. Hopefully you'll get to meet Silas across the day. We're working across a few new areas. Obviously, we're well known for our events, which is our primary lever to kind of achieve our objectives. But we want to work across FinTech skills and international trade this year, and I'll expand a little bit on those. Obviously, we want to raise the bar on our events and do bigger and better events. We're thrilled to be here in Newcastle with our conference today. We're hosting a 2-day summit in York in October as well, so not too far down the M1, down on the train as well. So it'd be awesome to see some of the Northeast FinTech community at that event. We announced it yesterday. You can find out more details on our website. On the international trade front, at the start of last month in June, we were in Amsterdam as part of a DBT delegation to Money 2020. We brought about 17 or 18 people, about 10 organizations from the north to attend a trade mission. We want to make more of this stuff happen, both inbound and outbound. So if anybody's involved in international trade, we'd love to have a chat with you and see how we can facilitate that. And then finally, skills. We're constantly hearing from people in the early stages of a FinTech career, how do I get into FinTech? What skills do I need? Where are the jobs? Where are the internships and the apprenticeships? Similarly, we hear a pain point from some of the employers that we work with, some of the established FinTechs and financial services firms saying, we're struggling to recruit, we can't find people with the right skills, the supply is not sufficient for the sector. So we've decided to do something about it. We can't deliver a training program ourselves where we're at the moment as an organization. We're not an academic institution, we're not a training provider, but we do know all of these stakeholders in the ecosystem. We know the employers, we know the training providers, we know the accreditors. So we've decided to convene the right group of people round a table. So we've set up a steering committee to enhance the supply of FinTech skills in the north. And Silas, who's in the room and who's with us today, is our intern. He's going to be helping coordinate some of this activity. So if this resonates with you as an organization, if you're facing challenges here, or if you think you're well positioned to help us on this crusade, we'd love to hear from you. So that kind of brings me to the end of my presentation today. Really looking forward to hearing from you all and getting stuck into some of the content. A couple of things to highlight. We are hosting a FinTech showcase at the end of the day today, which is where we get local startups and scale-ups, as well as other people and stakeholders and ecosystem enablers to talk about FinTech. We'll be serving popcorn at that point. Obviously, we're in a theatre, we've got to be doing that. So yeah, just wanted to highlight that as an interesting segment right at the end of the day today, and we'll be hosting a drinks reception as well. So please do stick around for the full day, that'd be awesome. Final bit of trivia to leave you with. This awesome cinema was opened by Ridley Scott's great uncle as well, so just wanted to give you that bit of knowledge before I leave the stage. So yeah, it's awesome. Looking forward to today, and it gives me great pleasure to introduce our first speaker of the day, and it wouldn't be a Northeast FinTech conference without Atom Bank. So have we got Ed in the audience? Awesome. Make your way up to the stage, please, Ed. Thank you very much. Just want to say a huge thank you to the team at Atom, to Ed, to Mark, to Robbie, and all of the team for their steadfast support. I think this is the 3rd conference you've supported in a row now, so thank you so much, sir. Thank you very much, and that's the slides just go right there. Take it away, thank you.
Hello. I want to echo Joe's words about this venue. It's an iconic venue, and it's also part of our institutional, I think, cultural framework that keeps the city together. It's a great place to come to. I'm going to just momentarily put on a North Star cap. I chair North Star. We were delighted to finally get £700,000 of North East Social Investment Fund into this place just a few weeks ago. It is a great place to come to. Please help them to pay that debt back. Right, moving on. I'm going backwards. Here we go. This could be subtitled, you've got to be sustainable to be sustainable. And what I mean is, that I'm going to try and spend a little bit of time at the end talking about what I focus on, which is our environmental and social investment strategy at the moment. But the only reason we can do that is because we've made strides at actually becoming commercially sustainable. It's a relatively straightforward story, and you probably have heard bits of it before. But Atom now employs about 550 people. We're based in Durham, but we reach out and bring up people together from across the Northeast. We've got a small satellite office in London, and about 20 people or so who are on distance home working contracts. Our mission is really simple: change banking for good. And there are three key vectors that we measure all the time as to whether or not we're on course to achieve that. Are we faster? Are we easier? Are we value for money? Atom's not built on product innovation. We're not trying to change the products that people need, because they're not saying that they want different products. They're saying that they want them delivered faster to them. And behind the scenes, therefore, all of our innovation really boils down to process innovation. Taking friction out, taking cost out, taking time out to make it easier to bank. We're not a current account bank. We are a lending bank. Our social objective, if you want to look at it from that perspective, is actually to lend more money to those people who want to own their own homes and those businesses that want to grow. So we do mortgages for private individuals, residential mortgages. We do commercial mortgages for SMEs of all sizes and shapes. And then we do unsecured lending with our partner Funding Circle. And we probably provide about a third or so of everything that Funding Circle does out in there in the community. And then that flows back onto our balance sheet. Making that faster is imperative to win, because I'll come on to some of the disadvantages that a new fintech or a new bank has in a marketplace that is super dominated by a few incumbents. We're not here to be speedy for the sake of it, but we are here to be speedy to make sure that you aren't spending more time as a customer dwelling on us. We're here to make choices quickly. We're very proud of the speed at which we can make mortgage decisions. We're much, much better than the market out there. And when we get it absolutely right, you know, one of our favorite lines is, we can change your application into a fully funded underwritten decision in your favor in about 12 seconds. You know, that pushes more business through our machine more quickly. That gives us more of an edge when customers are going to mortgage brokers, because incidentally, we don't sell direct our loans to anybody. We always, whether you're a business customer or whether you're a private individual or household, we want you to go and get independent advice. Question mark, is that intermediation something for the digital world? I kind of believe it is. You know, I kind of believe that actually banks have not got a great reputation when they sell products, lending products direct. They tend to want to wrap another product around it, excuse me. They tend to want to only give a very partial view. So if you want an Atom mortgage, you have to go to a broker. And that broker has to recommend us based on only two criteria: price and service. Process innovation wins the service argument. Process innovation helps us win the price argument too. Keeps us slim and keen and cost efficient. And that's what creates better value for money. So that at the heart of the machine, we can live on thinner margins than any other lending bank out there. We are able, therefore, to give savers a much better deal, while simultaneously competing toe for toe in that intermediated mortgage market and that intermediated SME loan market for new business, because we offer great price. And it's only through that we've managed to achieve the progress that we've got to. So, a few numbers about last year. Really substantial increases in profitability, driven by lending. Not driven by just growing the balance sheet for the sake of it, but instead by growing the balance sheet through lending. And we believe that's the fundamental part of what a bank is there to do. You know, we are the risk takers between deposit holders and those who need money to secure their future. And if there is a phrase in these slides about leveling up. If you were to actually plot Atom's business geographically by savers against borrowers, we are actually a leveling up organization because our savers are rich, old, and southern, and our borrowers are young, northern, and much more exciting. Don't tell the savers I said that. But it's absolutely true. You know, that's not our objective. You know, that genuinely isn't part of our objective, but that is the truth. You know, that at the heart of the banking machine that Atom has created, it's the transfer of money from those who have to those who need, those who want to grow to those who want solid income. And there's nothing wrong with that, I don't think. I believe that's socially valuable. I have to say, I think it's more socially valuable than being pinged when you buy a coffee, okay? I think that's what banking is for. We need to get bigger. So we're a balance sheet organization, and that balance sheet needs to spin more quickly, and the circumference of the flywheel at the heart of the machine needs to be bigger. The more we do that, the more customers we serve, the more savers we want to take on board, the more people we can give a great value lending product to. But there are some massive imbalances in the way that the UK banking market works. These are not unique to the UK, but they are very much biased, more biased in the UK than any other economy, just because of the way that banking has over the years, and we'll go through another cycle of this, gone through a process of merger and acquisition to consolidate into a few big lenders. But they haven't just taken that merger and acquisition position forward. They're not just taken market share forwards, they've taken some massive structural advantages with them. Okay, this is a bit dull, but really important. So at the heart of all the lending decisions that every bank makes is your capital allocation process. How much of your capital, of your risk capital, do you put alongside every single loan? And when you start, in the UK at least, you will either be on the standardized regime, which is actually a global regime telling you how much capital as a percentage of each loan you have to hold against risk. Or you might be on the strong and simple regime, which is a UK-specific regime, which is actually not very good if you're a fast-growing business. It fixes percentages and you want something which is much more responsive to the growth in your balance sheet. However, if you're big and old and have had a long-term relationship with the Bank of England and the regulators, you will probably have gained a pass to what's called the Internal Ratings Board, IRB. That allows you to apply your models of capital allocation. And your model of capital allocation will allow you to use your cash so much more efficiently than the standardized regime or the strong and simple regime. It basically means it costs them less to lend. Now, we've only been around 10 years. I know that's a moment in time compared to the decades and centuries that others have been around. But we're lending into really simple markets. We're not lending into asset classes that anyone struggles to understand. And indeed, we've got less than 1% defaults across the entire book. If we had an IRB waiver, which is the process that we are in the process of applying for, we could reduce the amount of capital allocated to each loan and basically do more of them. So if we want to take process innovation, if we want to take product that is delivered beautifully with the highest levels of appreciation in any banking sector in the UK, this is what Atom's got, and deliver it to more people, we've got to struggle and get ourselves at this IRB waiver, because at the minute, it ain't a fair place to play. The other side is that the deposit market is not actually all that competitive. And that's partly because as private individuals, we tend to be a little bit lazy. There's a lot of stuck money out there, and there's a lot of stuck money being paid not very much. But with high interest rates, 5.25% at the moment, let's see what happens at the beginning of August when the MPC next meets. But high interest rates, that's money. There is no limit to the amount of money that any bank can currently put with the Bank of England. Now, there was a political conversation in the run-up to the election about how much that's costing us. If a bank is actually lending, then that is part of the transmission mechanism. So the idea is that you put your money as a bank with the Bank of England overnight, you get paid the base rate. But you are then pushing that through into the cost of money to customers. We can argue over how effective interest rate really is, given how few people are in debt at any one time, and actually who those people in debt are. But nonetheless, that's the transmission mechanism that the MPC is trying to use every day to set base rates, when it sets base rates. But if you're a bank that actually doesn't lend, you still get 5.25% for doing nothing. So there's a whole bunch of people out there creating businesses, and this might be sparking ideas in the room, where you just put your money with the Bank of England, take no risk, I would say add little value to society, and gain a huge amount of income. One well-known recent current account-based FinTech made over 250 million quid from that last year and does no lending. That 250 quid came from you and 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 me, because the Bank of England doesn't have any money. The Bank of England is funded by the Treasury, and the Treasury gets its money from the taxpayer. So there's a massive taxpayer-funded transfer to banks going on at the moment. And I'm no voter for reform, but they latched onto something when they started to say, what's going on here, folks? It's costing billions, and it's propping up incumbents and those who don't lend. So we think that those things need changing. But I'm not here really to linger on that. I want to just end with a story about what we do now that we are sustainable. So I said, being sustainable to be sustainable. So Atom has made a promise that by 2035 we'll be climate positive. So by 2035 we'll be responsible for taking more carbon out of the atmosphere than we're responsible for putting into the atmosphere. As an operation, we're actually already super efficient. We emit per FTE, so per full-time employee, about 1.3 tons of carbon per year. Just to give you a sense of what that means, if you live in an average-sized house with average sort of energy efficiency, just your heating and your power use will account for somewhere between sort of 3 or 4 tons a year. So we managed to run our operation and serve all those hundreds of thousands of customers, 550 of us doing that for about 1.3 tons carbon per year. That's top 2% or so in all companies in the whole world. However, we finance going on for 300,000 tons of emissions because of the mortgage lending we do, because of the commercial lending we do, because of the unsecured SME lending we do. And we've said that by 2035, that 300,000 will be a negative number. So on our strategic scorecard for the year, the thing which everybody's variable pay is based on, and the thing which we will base our annual report on next year, 2 new measures. First, that we will decrease the economic intensity of our the carbon intensity of our lending on an economic basis year on year. So we'll reduce the amount of CO2 per £1 million that we lend. And secondly, that we will lend to or invest and put on our own balance sheet at least 100 hectares of natural capital, you can call it rewilding, whatever you want to do, every year, and grow that to 1,000 hectares a year by 2027. So we are in the game here of changing the balance in the way people bank, changing the price that they can get for their banking, and being part of the future. Because if there isn't a future based around stable climates based around atmospheres that we can all enjoy and live in, no matter where you are in the world, we ain't doing the right thing. Finally, we've also made some really big commitments through our social investment strategy this year. We have set up a Women in Tech Scholarship, funding young women from low-income backgrounds for a full 3-year scholarship in the computer science department in Durham. And we've recently launched and supported 13 young people from the region who are either carers, in care, or again, on low income, so from families who are eligible for free school meals, to support those kids to get to Russell Group universities. We're not elitist, but we want to break down barriers which currently stand in the way of kids from the Northeast who are not currently taking up places at Russell Group universities. We still employ a lot of people through our apprenticeships. We employ a lot of people who have graduated from other universities. We continue to support our people to gain further qualifications. It's not an elitist perspective, but it is about excellence, and there aren't enough kids in the Northeast going to those excellent educational institutions. That's it from me. Thank you for your patience. And I will hand on to... Oh, questions. Questions, I've got time for... I've got time for questions, Joe? Any questions? Oh, yes, I see a hand. Hello, Lauren.
Hi. Bit of a cheeky one, really, but how hopeful are you that the new changing government might help create an environment that will help you in your, your challenges and your aims? And do you have a direct line to Rachel Reeves?
I'm not going to answer the second part.
No,
Yeah, I think we've had a very positive engagement with government about competition and about growth and about making sure that actually those who lead are rewarded for the investments that they make. I don't know whether it's going to deliver, but we are the only country, as far as I'm aware, to be trying to run 3 capital regimes for our banks simultaneously. That's not healthy. That's just not healthy. That will lead to worse outcomes as businesses struggle to get onto that sort of level playing field. I think as someone who was at the Bank of England for a long time, Rachel is a firm believer in that transmission mechanism. But I don't think that allowing everybody to have all their money sat at the Bank of England paying 5.25% is a very sustainable way for us to drive competition. If you look at the banking sector at the moment, it's only just valued around its book value. So basically, you could break it up and probably get more money than actually the institutions themselves are worth. There are some exceptions, but many are valued at or just below book value. That's a reflection of the market saying, you're still propped up. You are not as subject to genuine competitive pressures as we probably need to be. There's too much financial support. And some of that is, as I said, coming from all of us. There's another hand.
David Blunt from World Entirely left field question. What's your opinion on the Bank of England's thoughts about growing out a digital currency? Is that going to be a positive thing for your business or a negative?
I don't know if we know yet, because I don't know quite how pervasive it would be. I think it would be a good thing for the country for us to become increasingly cashless. That would be a good thing for Atom. We don't deal in cash at all. And I think there is sufficient reason for us all to be skeptical of businesses dealing with too much cash. So I would be all for following a sort of Finnish model towards cashless future, but that's my position rather than Atom's position.
We'll move things on. Thank you
Thanks.
so much, Ed. Thank you very much. So yeah, to keep things moving, just passing on from one of our fantastic supporters to another, I'd like to welcome Rachel from Invest North East England to the stage. Rachel's going to give a welcome on behalf of Invest North East England. So yeah, take it away, Rachel. The floor is yours. Thank you.
Just move this down for the shorties in the room. Welcome everybody. I'm just going to take a really quick couple of minutes to welcome you all to this brilliant venue in Newcastle for the FinTech North Conference. Obviously, we love sponsoring this event. We love to see all your faces in the room. And for anyone who's not from the region, a big welcome. Come and chat to me about why you should be here, because it's brilliant. Obviously, the Northeast continues to be very open for business, and exciting times in regional and national news, obviously, with the change of government. But obviously, Invest Northeast is now the inward investment agency for Northeast Combined Authority. So we've gone from a team of 3 to a team of a few hundred, which is brilliant, working under Mayor Kim McGuinness. I'm sure you've already seen there's been lots of positive news stories coming out about changes within the region. And we want to continue to promote the fact that the Northeast is very much open for business, and that FinTech is a huge sector in the region now for us. It's been growing thanks to all of your work in the region. Everyone across, industry, private sector, public sector, academia, everything that you've been doing and that how we've been working with FinTech North has helped us get to where we are. Obviously, there's lots more to do, but we're recognising that we're making things happen, as we always have done in this region, with or without funding. But now we feel like there's momentum and it's all kind of moving in a positive direction. So I want to kind of continue all that great work that's been done and continue to deliver on the goals and priorities that we set out through the White Cap report, through the strategy that we worked with FinTech North. And again, just a call to action from you guys to keep talking with us all, keep engaging. Let's see what we can achieve faster by working together. I think today is going to be a really good day again. I'm looking forward to hearing from across the region on startups and scale-ups. We've got lots to hear about how we're working with FinTech Scotland, how we're learning from what they've been doing. There's obviously some national chats as well, I guess, from ONS and CFIT to, again, hear a bit more about them. Plus one-year updates from FinPact, which is really exciting. Their incubator program, their schools initiatives, and their pathway pilot program. Not say much more because I don't want to steal anyone's thunder. But there's basically lots to learn today. There's lots of contacts to make and catch up with if you haven't already. Really proud to support this event. Happy to have a chat with anyone who wants to. But yeah, let's keep going. Thank you.
Very well said, Rachel. Thank you so much for your support. You've been an awesome partner of our organisation this year. We were over at Money 2020 with Invest North East England. So yeah, you do a great job championing the region, and we're delighted to be working with you today. As Rachel said, the first part of our conference, we tend to kind of look at the landscape of the UK, what's going on across the UK, thinking about the sector holistically. So it gives me great pleasure to introduce Stephen Ingledew of FinTech Scotland, who's going to come up and tell us all about the excellent things happening north of the border. So yeah, join us up on stage, please, Stephen. Thank you.
Thank you, Joe. Well, lovely to be here. I've got strong affection to Newcastle and this part of the world, which I'll come back to. So even though, yes, I'm in Edinburgh now, and I'm a Reading boy, this part of the world means a lot. And I certainly believe, and I know a number of you here in the audience do, maybe not all of you believe, that the North East can become, and is becoming, a world-class FinTech cluster. And I'm going to take a few minutes to share from my experiences over the last, whether 40 years or more recent years, from across the UK, the T-shirts that I want us all to wear over the coming years to ensure that the North East does become that world-class FinTech cluster. And I'm not saying you put on those T-shirts right now, but hopefully you're going to think about the T-shirt you'll want to wear after today to contribute to that sort of journey that many of us do believe that the North East can take that sort of mantle. The starting point really is there's some real important foundations, and you'll hear about some of these later on today. From a UK perspective and a UK government, the North East is very much recognised as a centre around innovation. It's in the innovation strategy. There's various documents that have happened that are in the new government sort of manifesto and pledges that really demonstrate the North East is a focal area. FinTech, as highlighted in the Khalifa report from a couple of years ago, again identified the North East as an emerging cluster. And that's been recognised by locally working with the excellent the Whitecap team in developing a strategy that's led to the emergence of FinPact, a leadership body for the North East that you're going to hear again from later. And I don't need to go into that. So the foundations are there for the North East to become a world-class FinTech cluster. But when we use this word cluster, why is that important? Because these things are happening anyway. You can have an economy, an ecosystem, and industries, but actually to make a difference and to stand out in a very competitive world when it comes to economics, and particularly around the financial innovation and FinTech, you need to develop a more of a team-based mindset. And hence this term, cluster. And the word cluster is all about that bringing together around a specific area of interest, a common area of interest, which we've certainly got here, as demonstrated through the excellent work that's been led over recent years by the FinTech North sort of team. But it goes beyond that. It's about the connectivity between the participants in that ecosystem that make things happen. So much so that the whole becomes bigger than the sum of the parts. And actually the mindset is, for people, is not what do I get out of this community or ecosystem or cluster, but what do I put in to help the tide rise for everybody? Because when the tide rises for everybody, everybody benefits. So yes, you'll have your own individual business and personal objectives, but actually the value of clustering and cluster leadership is all about that coming together for the greater good, because then everybody will benefit. It's not just left to a few organizations or a few individuals who get the value from clustering. And that's the evidence, really, here in the UK, across other parts of the economy, including here in the North East, where there are some significant clusters in other industries, but also across Europe, that clusters can have a huge positive impact by bringing together participants with a common interest, but a different mindset beyond just wanting to get something back. It's actually putting in the whole being bigger than the sum of the parts. So the benefits are there in a very tangible form. And my experience of working across the UK, well, not just what we've done in Scotland, but in the UK, but also the engagement with European clusters in other industries, shows there's real empirical evidence of value from clustering. Whether that's in terms of the economic enablement they give rise to, helping new businesses start, helping established businesses to grow and innovate and improve productivity. Yes, higher salaries are demonstrated to be in cluster organizations and cluster participants rather than the general mainstream economy. Yes, in terms of not just higher sort of salaries, but greater levels of employment, but also greater levels of inward investment. Acts as a magnet. The evidence is there of clusters and cluster organizations who can make that happen. And again, the mindset here is a team-based. You can have all the players on the pitch, like Newcastle, or like Reading do, as great football teams, but actually it's about how they combine together as a team, and just great players themselves do not give rise to the results the way that clustering can give rise to. So that's why we talk about clusters and cluster leadership and cluster management being the opportunity and learning from others to leverage that opportunity for the North East to become a world-class FinTech cluster. Now, I'm not going to go into really the fact that the North East is already recognised as having some of the key technologies that are going to shape the future economy, including financial services going forward. All those areas on the left-hand side there, the different technologies that are there around digital, data, artificial intelligence, quantum, blockchain, all those areas you'll be familiar with. You're going to hear some great presentations on those technologies. And you're also going to hear from the right-hand side how they're being applied to innovate and change the financial world for the better. That's the ethos that we all share in the fintech world. We want to improve the financial world using new technologies to bring better outcomes for individuals and for businesses, as you've just heard from Ed at Atom Bank. So it's about that change. You're going to hear about that. You don't need to hear more from me on that today. I'm going to talk about the importance of the T-shirt, wearing the T-shirt and how you help that happen. Because it's the how that actually allows you to leverage the assets that you have here in the Northeast, as other regions have done in the UK, including in Scotland, and in Europe, to really bring about an acceleration of the innovation and the opportunities for businesses and for individuals. So the first, and I've got 5 T-shirts. There are others, but I'm going to share 5 T-shirts with you based on my experiences from across the UK. The first is, think big, but act small. There is a FinTech Northeast strategy. Great work with the FinTech team, the FinTech North team in pulling that together now. But it needs to go beyond. And what is that roadmap? What is that roadmap that actually sets the think big of where you're going, but then breaks it down into the actions that are very specific? And on the right-hand side there, you've got the FinTech Scotland outline of the roadmap and the key areas where we focus in on. We don't try to be FinTech for everything, but focus on the areas where there are particular strengths, particular businesses, and particular needs for innovation, whether that's in open finance or most recently, the development around financial regulation innovation. The Northeast has particular strengths and is developing its own wheel of areas to demonstrate think big, but act small. Payments is a great example of that. But there are other opportunities in other aspects, particularly linked to the mortgage and savings market. For Northeast really to stand out with a distinctive element of fintech innovation. So think big, act small is the broader starting block that you need to push off and a T-shirt to wear. The second T-shirt is actually fintech needs to be open for all, and diversity drives the creativity of the innovation you bring. And what you've got here in the Northeast is some other terrific industry clusters that have developed. Advanced manufacturing, because of the big players like Nissan and Hitachi. Energy and renewable energy, particularly with some of the developments that you've got in terms of the wind farm developments. Life sciences and health, the innovation centre around aging. All these relate as well to fintech innovation. So fintech shouldn't be seen as a vertical or in isolation. It needs to be interconnected with the other innovative areas of the economy here in the Northeast. The benefit of that is you draw in businesses that are not just around financial. And therefore the community that's developed, as I used an example in Scotland, which started with just 26 firms, has developed now to 250 firms, some of which started their innovation in oil and gas, in life sciences, in space, are applying their innovation, their technology now into the financial world to bring about change. It's that diversity that's created a very positive dynamic of a community at scale, but actually businesses are then linked together to drive innovation for the broader. So diversity and being open and inclusive and inviting in those firms that are outside the normal financial realms or financial industries drives a real creativity as to the type of solutions and businesses and innovations that can actually take place. The third T-shirt is around walking the talk. And we've used this T-shirt really to bring alive the importance of that collaboration in itself is not enough. Collaboration is talked about a lot, but it's a means to an end. And collaboration can just mean having a good talk, but actually it's the actions, it's the walk. And the collaboration between what's referred to as the triple helix of industry, academia, and public bodies is crucial, not just in bringing together, but how they drive along particular areas of innovation that I touched on earlier. By unlocking that triple helix of opportunity, there's opportunities to extend and enhance the funding that's already coming from UK government UKRI is a good example with the most recent sort of digital innovation technology grant funding. But there's others out, for example, with the Launchpad initiative, the catapults, to unlock further that, to provide that funding, that pump priming into areas of innovation, leveraging off the expertise and capabilities of all three parties in the triple helix: entrepreneurial businesses, big businesses, universities, the terrific 5 universities you've got here in the Northeast, or is it 5 or 7? And then, of course, the public bodies as well, the combined authority, the local enterprise partnership, and then the broader sort of public sector bodies that actually can enable some of the new technologies to be applied to help new business start and grow and develop. Collaboration has to go beyond that initial sort of getting together and having a common thought about what could be done. It needs to be driven into action. That leads me to my 4th t-shirt, which is around the whole mindset of progression over perfection. The dynamic of combining the right set of skills, which no one ever has at any point in time, all together in one place. Developing an environment of experimentation alongside how you kickstart initial businesses, allow those businesses then to scale as entrepreneurs, some of which don't succeed, some of which have to pivot, some of which have to merge or be acquired. But that's not a failure. So providing that environment, whether it's through the innovation accelerators, terrific example from Durham, it could be through that experimentation type sort of model, that environment that could be created to bring the different parties together. And I think the innovation center around data, the Helix up at Newcastle, is a great example of how that can happen. And then the skills, and utilizing the skills that need to be developed over time, rather than think it's all about technology graduates or those graduates from a maths or a legal profession. Broadening out the type of skills that are developed and emerge for individuals on an ongoing journey. And the boot camps led by certain educational institutions, you'll hear about a bit more later, are great examples of industry education coming together for those future skills. So progression over perfection is something where you kind of have to be on the pitch to be learning. And there are very examples where that's happening here in the Northeast. Is how you accelerate that going forward. And my final 5th t-shirt for today is that actually the Northeast can become a world-class FinTech cluster, but as part of a family as well, and leveraging that family across the UK. FinTech Scotland, 6 years old, would not be here today if it wasn't part of the UK and being part of that UK family that we've learned from and developed with and looked to collaborate with. It's not a competition between Edinburgh and Newcastle, Newcastle, Manchester, Leeds or Bristol. The opportunity is actually to recognise each other's distinctiveness in each region, and then how you collaborate to actually leverage that to support new businesses, existing businesses, terrific businesses like Newcastle Building Society, Strategic Solutions, Sage, Atom Bank, and build that as a basis of development. You'll hear from Peter in just a moment on Innovate Finance and the broader FinTech developments across the UK. You'll hear from Ksenia from the Centre for Finance Innovation Technology about those other UK elements that could be leveraged off. And the funding opportunity under this new government in terms of focus on particular missions of areas of innovation is going to accelerate. Already started with the catapults and the launch pads, as I mentioned earlier. The importance is to demonstrate how they're being industry-led and actually channeling those funding into new areas of innovation that combine FinTech with renewable energies, with health, with other areas of data that actually bring about a different way in which businesses can be established. So you are part of a family, and you can create your own distinctiveness as a Northeast, as a cluster, as part of that family. And I think that's the opportunity going forward. So for these reasons, I think if you're prepared to put on the t-shirt and live what the t-shirts are standing for, and with the leadership of FinPact you'll hear from sort of shortly, there's an opportunity really to see the Northeast cluster develop here around FinTech and be known for the areas of specialism, the areas of expertise, and the great people and the great community that you've already sort of recognized. That's the strength. And you can measure this. It is measurable in terms of the progress. And maybe 12 months' time we come back and we measure against. I'm not going to go through this checklist now, but it's something to come back to where you can measure both qualitative and quantifiably where the progress is being made to that journey of being recognized as a world-class cluster against the various aspects of performance, whether it's in terms of the government engagement, the skills development, the entrepreneurial businesses, established businesses innovating, the collaboration, the involvement of academia. All of that needs to come together as a form of measurement, and that's the scorecard that allows you to determine, are we making progress? And if not, it's not fast enough, what do we need to do? And I guess why I have that belief that, yes, it can be done in the Northeast, despite, in addition to the emotional attachment I have to the region, is because in Scotland, that's what we've done over the last 6 years. We've taken an innovative community of fintechs from 26 to 250, some of which are homegrown, some of which have come in from other parts of the world. We've taken the number of organizations involved from 5 initial to now 32, including the universities, including the big financial players, including the people like BT, and brought them together to generate more investment into the Scotland communities, Edinburgh and Glasgow in particular, new innovation labs that weren't there before, but also a cluster accreditation recognition that has given us a platform on the European stage and in the UK. And that can be done here, we believe, in the Northeast as well. So there's one final t-shirt I was going to leave you with. We're all inspired by individuals at the end of the day. Joe Strummer, I know, has inspired a number of you in this audience from back in the 70s. Many of you are not that old, I know. But the point he made was the future is unwritten. You can't predict the future, but you can help shape it. And the Northeast certainly has all the players on the pitch, all the ingredients. If it wears the right t-shirts, it can actually shape that future to become that world-class fintech cluster. As a panel to talk about how we bring that alive with more specific examples. But thank you again to the FinTech North team for allowing me to join you today.
Newcastle is calling, I think. I'll have an extra large t-shirt as well, please, Stephen. I think I'll need that. So from focusing around what's gone on north of the border and what we can do here in the Northeast, yeah, as Stephen says, we'll be returning to that topic with the panel a little bit later on today. But it gives me a great pleasure to introduce Peter Kinane from Innovate Finance next. Peter's going to join me up on stage now, and he'll give us an overview of what's going on in the UK sector as a whole. Innovate Finance are an awesome partner of ours, and obviously the UK sort of fintech sector trade body and a membership organisation as well. So Peter, why don't you come up and tell us all about what's going on at the minute in the UK sector? Thank you.
Good morning, everyone. Absolute pleasure to be here in Newcastle and to be with FinTech North once again. Congratulations to everyone on the team at FinTech North for organising another fabulous conference. It's always wonderful to come out and meet your community and to meet everyone here. My name is Peter Kinane. I'm the Director of International and National Initiatives at Innovate Finance. As has already been alluded to, I have responsibilities within our organisation for seeking out like-minded hubs, whether that's overseas or here in the UK, working closely with Joe and the team, with Stephen as well, and with many others right across the country, but we'll get more into that in a moment. There I am. I represent Innovate Finance. For those of you that don't know us, Innovate Finance is the UK's preeminent trade association, membership organisation, if you will, for the global fintech sector that is based here in the UK, which we're very fortunate to have here in the UK, a world-leading, world-class innovation and finance sector. And as such, we're an organisation that brings together the national and the international community here to convene, to bring together our startups and our scale-ups with our institutional investors and our institutional partners to champion and promote the sector, whether that's with government or with regulators, with like-minded hubs around the world, and to advocate and lobby on behalf of the sector as well, which, as you can imagine, over the last couple of weeks has been a very interesting time for all of us in terms of the move towards a new government and what that entails. And if I have time, I'll lean into that shortly too. We represent a very large ecosystem. We have approximately 300 members. And as I've already said, right the way through from your small startup, your two-person organization, all the way through to your Atom Banks, your Revoluts, your Monzos, etc. Very proud, of course, to have Atom as a member as well. And we work across a number of different areas of expertise within the organization. We promote 5 missions, which are around skills and talent and how we can build a better culture across FinTech, our investment and growth programs, FinTech as a force for good, which I'll talk more about in a moment, which is very much where all our mission around sustainability and diversity sits, our regulatory and policy thought leadership, and our international connectivity and scaling as well. I believe I have a slide for each of those. Here we go. Skills and talent, we're very much supportive of the development of skills around the UK. We work closely with a number of academic partners through something called the UK FinTech Academic Network. We work with a number of universities and colleges around the UK to ensure that not only are we getting the right skills coming through, but we're seeing the right qualifications coming through. But we also work with a number of partners to ensure that people coming into the sector post-education are finding the right culture as well. Our investment work is key to a lot of what we do. I think I've got a slide later on detailing some of our more recent numbers, which I'll come to, but that's a very important project for us every year to take the temperature around what the investment into the ecosystem looks like. And we run a number of events around that to ensure that our FinTechs are meeting with their future partners and ensuring that that investment continues to grow the sector. FinTech as a force for good. It's our second largest event of the year as well. Happens every autumn. And it's, as I've said, a collection of our sustainability and diversity programs, ensuring that financial inclusion remains at the heart of everything we do, and ensuring that everything that our members is doing works towards net zero gains as well. Our regulatory and policy thought leadership, I'll come back to that because that's been obviously very topical of late, and our international work as well, working with the Department for Business and Trade and many others to ensure that we're promoting the sector in the right way overseas, that we're attracting companies coming into the UK. And recently, Innovate Finance has launched its own US program. We now have an overseas office in New York City to ensure that connectivity between North America and the UK is continuing to thrive as well. I mentioned our policy work. There's a number of areas there that we work across with regulators and with government to ensure that we're heading in the right direction in terms of the policy approach by government to the FinTech sector. In the last year, we've worked very closely with governments to ensure that authorised push payment fraud is tackled. We've worked closely with CFIT and others and the government around open finance to ensure we have an open economy. And we've worked around the issue of smart data as well, and we continue to do so. I mentioned the international piece there. The promotional piece is very important to us, as we're also represented at a number of events, working closely with FinTech North, for example, in Amsterdam and in other places as well to ensure that that message is coming through. But let me move on and talk more about the FinTech ecosystem as we see it at present. The stats are there, 6.6 billion in terms of value to the UK economy, 2,000 companies across the UK, and a very international community in terms of 42% of people working from overseas within the community. The national picture as such, and Stephen's already alluded to this, we are a family of FinTech associations and representative organisations from right around the UK. We work closely with all of those through our FinTech National Network. We've also been hosting a number of events recently in Birmingham, Cardiff, and virtually in Scotland as well. And as I've noted there, always proud to come and speak at FinTech North events too. There's room for growth, as you can see from the bottom corner of that slide there. We are looking at an emerging sector in the east of England too. So we're always looking out for, supporting those partners that are coming through to support their regional clusters, and had some great conversations already over the last day or so about FinPact and looking what we can do to support there as well. There we go. I don't need to tell you what a fabulous place the UK is, but there you go. There's a list of good reasons why you should be here. I wanted to talk about investment because it's not been plain sailing the last 12 months, to be honest. These are the stats for 2023. A 5.1 billion, impressive number, invested into UK FinTech, but down significantly on the previous couple of years. Please take heart that actually we're starting to see something of an improving picture, although that seems pretty flat. The UK remains the second only to the US in terms of investment into FinTech. So it's still a very attractive proposition globally. And what we are also beginning to see is a greater amount of investment into emerging areas of FinTech, whether that's around RegTech, InsurTech, and of that 5.1 billion, a billion of that was invested into female-led businesses as well within the FinTech sector. So we're starting to see some encouraging green shoots, if you will, for a more diverse sector and a more representative sector in terms of the investment coming through. And in fact, our H1 figures for the first 6 months of this year indicated a slight improvement in terms of that growth. And again, second only to the US in terms of deals being done and amounts being invested. Perhaps more impressive is where we stand in relation to the rest of the continent. This looks like something from the Euros. If only our football teams performed as well as that flag, and compared with all those others. But yeah, ahead of the next 28 centres for FinTech in Europe, the UK stands apart as a world leader for investment into this sector. And this is a point that we've pressed with the new government. We launched last week, alongside our H1 investment figures, our FinTech plan for government, which very much builds upon our previously released manifesto, which has 3 pledges. 1, to open up the economy as far as we can to digital investment and have an open finance, open banking economy. 2, to have a trusted economy. I've talked about the work that we've done around APP fraud, but looking at how we can tackle fraud to ensure that the UK remains a safe place in which to do business. And 3, to develop a highly skilled and highly innovative FinTech economy as well. And those 3 pledges from our manifesto have translated across into our plan for government, which we have submitted to the government for consideration. And over the next 100 days, governments come in with their 100-day plan. We're no exception. We have a list of suggestions for the next 100 days of the new government in terms of what we'd like to see in terms of taking UK FinTech to that next level. And we believe that all this culminates potentially in a 330 billion GDP growth for the UK in the next 5 years in terms of where FinTech can be, which, as you can imagine how that translates into all those clusters around the UK, is substantial growth in rebuilding the economy. And we believe that we have the support of the new government in reaching for those figures. Someone asked earlier, it was Lauren, who said, do you have a direct line to Rachel Rees? I'm not going to answer that either. But we've had really great engagement so far with the new administration, and we're seeking to build on that, of course. In terms of other things that we do that are up and coming that you may be interested in, we're very proud to have launched Pride in FinTech last year. And we've launched this year's Pride in FinTech in the last month. I encourage anyone in the community there to take a look at that and fill in your story. We're looking for great stories and nominations from around the community to fit in with our Pride in FinTech initiative this year, which we will be celebrating on the, I think it's the 4th of December later this year, in partnership with Zopa. This builds on our existing diversity programs, including Women in FinTech, which alongside IFGS, which is our 10th, which is our major conference of the year, it is also 10 years old later this year. We're looking to run the Women in FinTech Power List once again later this year, so do look out for that. And as I've mentioned, FinTech as a Force for Good is our next big event in October, on October 10th. So we're also looking for participation in that as well. It's a really important piece in terms of our sustainability and inclusivity work too. I'll close it out there. If anyone has any questions, I'm around all day and I'm happy to have a chat about our broader work and what that means for you and your business. But thank you very much for your time. Really appreciate it.
Top marks to Peter, as ever. He's brought us back on time, which I'm very relieved about. Thank you so much, Peter. Awesome to get an overview of everything that Innovate Finance are working on. And really interesting to hear about the funding landscape there as well. And that segues nicely to our next speaker as well. I can see Charlotte at the side of the stage. Charlotte, why don't you come up on stage and talk to us about the funding landscape for FinTechs? Obviously, scaling is a theme for us today. Everybody's interested in how we can grow startups to scale-ups and then to become more established companies. So Charlotte, come and take it away from there. Thank you.
Awesome. Good morning, everyone. Thank you so much, FinTech North, for having me, and thank you, Peter, for setting me up perfectly there. So, good morning. My name's Charlotte Scott. I'm Senior Investor Relations Manager at Innovation Super Network. And this morning, I think I'd give you a sort of a high-level overview and understanding of the funding landscape and how it relates to angel investment and the work that we're doing in that area, as well as challenges and opportunities for angel investors in FinTech. There we go. So I'm going to do a really quick overview about who we are, what we do, how we do it, and our investor community as well. Angel investors, who they are, how and where to find them, which will set us up perfectly and give some practical tips to the startups who are taking part in the showcase later, and also give an oversight of challenges and opportunities investing in FinTech as a sector for any potential prospective angel investors out there. I think when you work in finance, you almost take it for granted that this isn't necessarily an asset class that everyone is familiar with and understands the mechanics of. So actually, I thought giving you a bit of an overview today would really set us up nicely for that showcase later on. And my colleague, Carl Mulray, who's also on our investor relations team, will be providing more of a deep dive to lead us into that showcase later. So, who are Innovation Super Network? So we are based in the Northeast, we're a not-for-profit, and we essentially provide businesses with what they might need to innovate and grow. So that could be guiding them with business support throughout that entire innovation roadmap, from ideation stage to getting their business plan off the ground, connecting them potentially with universities to help with that validation piece and finding product market fit, all the way through to financial modeling, as well as understanding their different options, finance, and preparing for investment or preparing for a conversation with a debt provider or applying for grants as well. And we are an investor partner with the Innovate UK Investor Partnership Future Economy Programme scheme. So for our North of Time based businesses, we do have an Access to Finance program live at the moment, Pathways to Funding, Access to Finance North of Time. And that is essentially one-to-one investment readiness support with our innovation managers who really help guide startups through that business innovation roadmap using sort of structured investment readiness levels to guide them through every stage. And then sitting above that is the Northern Investor Hub, our investor community, where the investor relations team really help them sit down, understand their finance options, connect them with investors, help them prepare for those discussions, because I think a lot of jargon is used in finance, and startups and the feedback that we tend to get from VCs reflects this. startups can be unprepared for actually what those investors' expectations are around valuation, around sensitization of the funding model, around term sheets, and real key deal mechanisms and deal terms that startups should be expecting, and really helping them speak that investor language so they can take part in those discussions really confidently. We also do a lot of deal facilitation work. We don't negotiate on behalf of startups or investors, do not worry, but we are sort of playing the part of that critical friend, that person who a startup can call and say, okay, we started talking about this in the conversation. Is that normal? You know, what exactly did they mean by a convertible loan note? How does that work? And when they do need very specialist support from experts, we can connect them and signpost them to the appropriate qualified partner to do that. As well as workshops and events. We do a lot of educating investors. In the Northeast, statistically, we have a very low number of angel investors. That is changing. We are seeing some more exits coming through. So we will find former founders who exit their businesses, become high net worth individuals with some cash that they may wish to invest, and support their own communities and give back and support other entrepreneurs in the sector. So we're working with the UK BAA, so the UK British Business Angels Association, to really give that helping hand and provide a structured course for first-time investors and prospective investors who actually might want to find out more about exactly how that process works. And we do other workshops and events as well, working with partners to give a deep dive for entrepreneurs into different aspects of their business. So let's dive into the funding landscape. First, let's look a little bit at the sort of typical roadmap of a startup. So if we have the green line is revenue, and then time as the business grows along the side, along the bottom there. And typically when startups begin, they have a great idea, they have a concept, and they spend a lot of money on that and hopefully launch. And then because everything takes twice as long and is twice as hard and it never works the first time, probably pivot and then ideally find that product market fit, have additional sort of initial revenues coming in, grow those revenues, scale the business, and then look at growth capital as well as scale. And in that little dip, it's rather charmingly called the Valley of Death. And that tends to be where we work with our clients and the level of business that we're supporting, because it is a very difficult sector, area of the business and business life cycle to navigate. You're spending an awful lot of cash before you see any revenue. And how that translates then into the funding landscape is that startups and entrepreneurs will either bootstrap that or get support from the 3 Fs, sort of friends, family, and fools. Or they may also find very enthusiastic individuals, angel investors, who are willing to get behind their idea and push some initial funding into that business. As revenues begin to come in, you'll start seeing early stage venture capital, so early stage VC, and this sort of middle segment is divided into 2. So you get early stage, some funds really specialize in the early stage environment, moving into late stage, and then private equity and family offices investing later on when you have profitable businesses. Debt finance typically tends to kick in as soon as that green line goes above 0 and you can demonstrate that you can service loans. That's when you tend to look into debt provision. That you'll notice there's a little bit of a dark bit in the middle, and that's typically where angel investors and early stage VCs work together and have a lot of crossover. So you see that angel investors actually have a really crucial role to play in the funding landscape by providing that initial capital to businesses to get them over to the line, to help them generate their initial revenues so that later stage funders and institutional investors can then help provide that capital to really grow and propel those businesses and help generate the next generation of business leaders. Moving on then. So who are angel investors and where do you find them? Typically self-certified, high net worth or sophisticated investors, i.e. investors and individuals who may be working in the provision of finance. So potentially a few of you in the audience who understand the risks, who understands how deploying capital works and potentially may qualify. Check professional networks, your FinTech communities, including accountants and lawyers. If you are an entrepreneur in the audience and you're wondering where to find them, do speak with your accountants, your lawyers, your team, other people in your community. Normally, they tend to be very enthusiastic about the sectors they invest in, so this would be a wonderful environment to find your first investors. Motivated by SEIS and EIS tax reliefs, can be more active towards the end of the year. So you can be very strategic, entrepreneurs in the audience, about how and when you choose to fundraise. Experience levels varies, and trusted investors often tend to influence others. We really are keen to foster more co-investment in the Northeast because we don't have a huge number of angels. It's a very small pot of funding and landscape, and so everyone tends to know each other, and there tends to be a lot of crossover between angel groups. So co-investment and trusting each other and building those trusted relationships is really important. So if you are thinking about investing in the sector, what kind of things are you looking out for? And also, how does it differ from other sectors that you may invest in? We've spoken and we've heard about already the various different areas of innovation, innovative technologies emerging in FinTech, very fast paced, which means that as investors, you would need to be able to keep up to date in these technologies, really embed yourself in that environment to understand what a good deal looks like, to understand how defensible a technology is, and therefore how risky and rewarding that investment and that business might be. Volatile market. This very much ties in with regulatory hurdles and adherence and compliance. We know the landscape is changing. You know, Peter's got his plan for government. We've got direct lines to Rachel Reeves, maybe, maybe not. Things are changing with government, and so you really do need to keep involved and keep an eye on those regulatory changes. As with every asset class, though, and every startup investment, it's very high risk and high reward, potentially. So it's something, and we always encourage a diverse portfolio. But it can be very, very rewarding. And as we mentioned, because of all these different aspects of investing in the sector, as investors who are embedded in this community, you can have a huge impact on leading other investors alongside you to co-invest alongside. So if you are interested in finding out more, you're also an entrepreneur who may or may not know where to start, and you want to speak with myself or my colleague Carl, please do come and find me. There's also my email address. Always happy to have a coffee and sit down and chat through with anyone who's interested. Thank you so much for having me, and I'll hand back over to Joe.
Absolutely smashed that presentation, Charlotte. So much insight packed into such a short space of time, and yeah, a really good precursor to the showcase that's going to be on later on. So if it gives me, again, fantastic pleasure to welcome Senya to Newcastle and to the stage. Senya is, well, representing CFIT, the Centre for Finance, Innovation and Technology, a body set up in the aftermath of the Khalifa Review back in 2021 to really kind of leverage, I think, you know, all of the ecosystem, all of the stakeholders within our sector to kind of, you know, help with sector and societal issues. So, yeah, Senya, why don't you come up on stage and give us an update on all of the activity with CFIT? Thank you.
Hi, everyone. Great to be here. Thank you for the introduction. Yep, here we go. Yes, just for those of you who don't know us, as just been explained, the center has been set up really as a recommendation of the Khalifa Review, which was published back in 2021, really to recognize that coordinated action supported by the government and led by the sorry, can you hear me okay? I get a bit of feedback. Yeah. Sorry, recognize that there's coordinated action supported by the government, led by the sector, is really required to continue to scale the FinTech and financial services sector. CFIT's mission is to unblock barriers to innovation and accelerate the growth of the sector. We bring people together to convene coalitions of experts from finance, technology, academia, policymakers, and third sector organizations to really tackle challenges that the sector is facing. Seafood Coalition is a dynamic, purpose-driven, strategic convening point with most pertinent stakeholders in the ecosystem. Working collaboratively, we harness the collective expertise and diverse perspectives of our partners to really deliver tangible outcomes and drive forward innovation, investments, growth, and ultimately also benefit the society and the economy. Here we go. Our first coalition focused on open finance to accelerate more data sharing and provide better products and services for SMEs and consumers. Why open finance? Well, there are many reasons, but just to mention a few, we do believe open finance represents the next phase in the evolution of financial services innovation. It builds on open banking, which introduced the concept of securely sharing consumer data with trusted third parties. But open finance encompasses even broader range of financial information, savings, mortgages, pensions, and so on. And there's also opportunity on the international stage for UK to set up global standards in open payments and data and unlock new avenues for scaling fintechs and trade. Our coalition culminated with publication of the Open Finance Report and a showcase event back in February, really providing a clear strategy on how industry and government could really deliver on potential of open finance. Our coalition explored 2 use cases, and I'm going to tell you a bit more about each of them. Our consumer use case, for that we partnered with Citizens Advice, debt advisory service, to really revolutionize debt advice in the UK. Why this use case? Well, to mention just a couple of things, in the UK, we've been experiencing the largest drop in living standards since 1956. The increasing cost of living is having a dramatic toll on people's ability to buy essentials. Half of Citizens Advice clients cannot buy essentials like bread and milk. To really help those individuals, we also need to address the issues that the debt advisory services are facing. They lack sufficient data and funding to really adequately support the multitude of individuals who are seeking their support. 75% of calls to Citizens Advice are left unanswered. Those who are lucky enough to get through and speak to someone, they are then faced with the task of going through their personal finances to fill out a financial statement which requires 600 data points. It's a mountain of tasks for both the clients and the debt advisors. Our proof of concept addressed that issue. For Citizens Advice clients, we designed a streamlined, stress-free solution with understandable explanations why their data is needed for faster debt advice to enable them to share their data quickly and easily. For debt advisors, we designed new dashboards that provide a holistic view of the client's financial position over a period of time. Empowered with these dashboards, the debt advisors can swiftly and precisely assess individuals' financial circumstances, enabling them to offer financial tailored debt advice within minutes. You can see those dashboards here, and I would really encourage you to check our website with much more information on all those solutions. What does this all mean? Well, it means that we can now pre-populate 90% of data points in the standard financial statements, which really then means that the advisor's capacity could increase by 45%. This directly translates into the fact that those debt advisors are now able to pick up the phone and support more vulnerable people who are trying to reach them to get support. We also think there is a significant long-term impact. Over the next 10 years, this solution could help between 1 to 1.5 million vulnerable people. And also to mention, within months of completion of the coalition, the Citizens Advice rolled out 3 pilots across their centers. And the outcome of these pilots will lead to a national procurement exercise to then roll out the solution across all Citizens Advice branches. Now, our SME proof of concept, we focused on SME lending. Again, you might think, why this use case out of so many options we could have chosen from Open Finance? Well, I think it's worth saying SMEs constitute 50% on the private sector turnover, but they face £22 billion funding gap. So we worked with HSBC and other partners in the coalition to explore how using open finance could enable better lending for SMEs and help those SMEs really reach their potential, and also explore how we can remove any unnecessary friction from the credit application process. Some of the most valuable data sets about businesses are actually not easily accessible or underutilized. And SMEs find that creditworthiness of their business is often determined by a limited view of directors' credit profiles. We've developed a solution which streamlines data sharing for SMEs and brings additional data sets to provide a better picture of SMEs' financial health. We've been able to build dashboards for underwriters, assessing SME lending applications and credit decisioning. Again, you'll see those dashboards. Please do check online for more details. What is the impact of that work? Well, our SME use case showed that accessing additional data sets from HMRC or a company's house data sets could provide a holistic view of SME financial health and enable more lending. By accessing greater data and personalized information, 25% of SME loan applicants who had been referred for manual underwriting and would have potentially failed to receive an offer of credit could justifiably be given access to finance. Over half of SME sample that dropped out of application process could have received a credit decision if they completed the journey with the additional data sets. And additionally, we also see some operational efficiency. Data aggregation and visualization can reduce the time and effort spared on compiling data, gathering information from various sources. So this will also improve efficiency and facilitate more timely and potentially faster decision making. Our coalition was joined by more than 60 organizations. You see them here on the slide. Some of them are here today in the room. Apart from the 2 use cases and the report itself, one of the most prominent outcome of the coalition was establishment of an open finance industry-led task force that was chaired by CFED and was announced by the Economic Secretary to Treasury. The task force has a mandate to develop principles that would underpin commercially viable data sharing arrangements and provide recommendations to government how to safely unlock financial data to support SMEs' access to credit. The task force is going to report back this summer, so do watch this space. And now I just wanted to briefly tell you a bit more about our next coalition. It's just about to start, which is focusing on fighting economic crime through enhanced verification. Well, why economic crime and digital verification? Well, I think the issue of fraud can't be overstated. According to the latest data from UK Finance, 1.17 billion pounds was lost to fraud in 2023 alone through 2.97 million cases. That's 8,000 cases every single day. The implementation of digital verification could serve as a robust protective measure against potential fraud losses estimated as £3 billion. This could also stimulate introduction of new financial and cross-sector services, also potentially growing the economy. Some estimates says the application of digital data verification and across various products and services could potentially generate approximately £800 million annually for the UK economy, which will result in estimated added value of £4.8 billion from 2024 to 2030. You will see here our timeline for delivery. We are currently focusing on recruitment and onboarding of partners. We'll then move to discovery and data prioritization. This will be followed by use case prioritization of proof of concept development. And our blueprint report and the showcase event are planned for around February, March next year. During our discovery phase, we'll look to define what could comprise the corporate ID, which data set should be included, open banking data, HMRC data, company's house data, financial track records, company registration data, and potentially other sources that will be identified with our partners. Once the corporate ID has been defined and the data sets have been aggregated into a single API, we believe there is abundance of use cases in which this corporate ID could be used. Obviously, we think this could be used for payment verification and fraud detection, but potentially other use cases as well, bank account opening, KYB, e-commerce, and others. And this solution could potentially have a significant impact, enhanced efficiency through time saved, cost savings, but also wider benefits potentially if it could instill greater trust and transparency in the ecosystem. In the next 9 months, we will develop a scalable proof of concept and we will devise a plan for implementation in the UK. We are going to work with some of the biggest names in the verification space. We haven't announced our partners yet, but we're still recruiting, as you see, likes of MasterCard, Quantexa, One ID, and many, many others. And we are very welcome, we're very keen to include organizations from this region as well. So if you are interested, if you've got relevant expertise, please speak to me here or reach out to us afterwards. We'll be really keen to engage with you, hear from you. It's a fantastic opportunity to be involved in this initiative and really contribute to the discovery of new solutions that could potentially have a huge impact on SME businesses and potentially consumers and others in the future. That's all I have time for today, but I'm very happy to speak to you during the break. Thank you.
Thanks very much to Senya there. So we've got the regulator here with us today. So Hélène, please could you join me up on stage? It's awesome to have the FCA with us here in Newcastle. Can we have a big round of applause for Hélène? Thank you. So obviously the regulator has a key role in shaping innovation, and yeah, please Hélène, take it away. Tell us all about it. Thank you. That's nice to go for.
I'm all good. That makes it easy. There we go. Hello. Good morning, everyone. I am not scary. Yes, I am representing the regulator. And I've got the same jacket, I think, as Rachel today. So, here is good. It's a pleasure, actually, to be here today in sunny Newcastle. It's my first time here, so it's extra special. Allow me to start a little bit reflecting on the journey through the lifespan of financial services, reflecting over the start and sort of where I think we are, kind of current location and future destination. Our journey, I suppose, began somewhere on a narrow, winding road. The flow of information was quite slow, transactions took time, with a few actors controlling the flow of financial traffic. So we navigated this road with paper maps, manual processes, and the trip was a little arduous. Arguably, it was a little while ago. The narrow road gradually widened, and today, of course, the road is a modern, sophisticated highway, motorway, with plenty of vehicles there. Our financial ecosystem is bustling with innovation in the palm of all of our hands, I think. We utilize technology to tailor our own route, to manage our finances instantly and as seamlessly as possible. And we heard quite a few examples of that this morning already. And many providers have generated products and tools to accompany and assist our journey. There are, of course, regulatory speed limits to ensure a safe journey. And we have to remain cautious of kind of roadblocks or accidents, if you like. If we cast our eyes to the future, I suppose it's imagine a world there transformed by artificial intelligence, quantum computing, automation, with embedded ecosystems beyond finance, with multiple actors offering personalized financial services that anticipate our needs, utilizing smart data and smart data technology, API types of technology. Picture yourselves driving an AI-powered vehicle, perhaps, effortlessly navigating the road with real-time analysis. Of course, that future is not utopia, and a lot of that is already happening. But I think what I wanted to capture through that very short little story was the story of transformation and of digitization and democratization of financial services, and where innovation and tech can really empower us all to move forward. So my name, as you can see here, is Helen Ogezaher. I'm the Senior Manager at the Innovation Department at the FCA. At the FCA, we want to support the emergence of an era where innovation and technology help refining or redefining, I'm not sure yet, the financial services industry in a way that empowers consumers and enable markets to grow in a safe and responsible way. Our innovation function encourages the development, testing, experimenting, and launch of beneficial and responsible innovations. The FCA recognize the ongoing and future impact of technological change. And while change inherently carries risk, it's also, of course, very important to balance and think about the significant potential benefits brought by those. And I think it's also important to remember that is the way tech is deployed rather than the tech itself that defines the degree of risks and benefits involved. As a regulator, we support beneficial and responsible innovation. You're going to hear me say that many times until everybody repeats it after. This principle is embedded in who we are and what we are doing. And of course, that's reflected in our objectives as a regulator, namely protecting consumers, ensuring market integrity, as well as promoting competition and enhancing the growth and competitiveness of the UK market. You will have heard a lot about the latter, and I think we're going to hear a lot more about the latter with the new government in place. So I don't need to tell you the benefits that tech and innovation can bring. I'm sure you're all probably better aware than I am. But it has been 10 years since the launch of FCA Innovation, and we were called at the time Project Innovate. And we look forward to celebrating that milestone with you soon. So watch this space later this year. Since 2014, we have supported almost 1,000 firms at all stages of maturity, from kind of collaboration to initial idea, proof of concept, etc., all the way to actually getting in market and scaling up. So our function, I suppose, acts a little bit as a bridge between the FCA and the kind of innovative sector, if you like, collaboratively to address end-to-end needs and challenges and knowledge gaps. So our work is driven by our three-pillar approach, which is sort of around inform, intervene, and influence. If we think about informing, we proactively engage in market analysis and horizon scanning to monitor market, technology, and innovation trends. This year, we have established a market analysis scanning function for FinTech and RegTech, and our focus on staying informed, of course, help us to keep up with the pace of technological change and address risks and benefits of emerging technologies. We have a big role to play in terms of informing the rest of the organization as well. For example, we have done what I think is trailblazing work on quantum security and the need for industry to act at pace in this space, bringing a lot of other regulators across the globe, kind of aware, making them aware and bringing them on a journey. We have also ran policy sprints as we have been kind of evolving our sprint models, and that was in particular on crypto and open finance, where we've had over, I think, 100 participants in each of those. And that, again, has helped us informing our own policy thinking in that space. Intervene. We support, again, beneficial and responsible innovation. Over the past decade, we have significantly kind of expanded and launched several functions. That has included the regulatory sandbox, the digital sandbox that has been always open since last year. So in both cases, those were recommendations of the Khalifa review, in fact, to have those always open. We have also launched our innovation pathway services and tech and policy sprints, and we do a lot of emerging technology research. So our tech sprints support early ideation and policy development. They provide rapid insights into the kind of problem statements posed to participants. Our more recent tech sprint was on financial inclusion, and it took place for the first time outside of our London offices in Scotland. And I hope that we will have more of those outside of our London offices. This is also a call for innovators outside of London to apply to our services. They are open to everyone. And today we only have a small part of applicants who are not London-based, and it is something that we would like to change. The tech sprint on financial inclusion provided us valuable insight on financial inclusion, but also developed really practical solutions that we think should benefit many on the back of it. The DG Sandbox essentially facilitates testing and training proof of concepts with a vast array of real and synthetic data sets on a platform that is there for applicants and those that have been selected to use. The Reg Sandbox helps firms launch to market and test with real consumers. And then Innovation Pathways essentially helps firms navigating the regulatory framework, which we know is often complex, especially for those that are a bit more new to financial services regulation. So we know these services have made an impact. For example, in the recent survey, it showed that firms that have been supported by us are 50% more likely to get funding. But I think it goes beyond this. Of course, there has been many innovations that have been launched on the back of that, but I think it also helps in terms of fostering that innovation within financial services in the UK. And ultimately that benefits the economy, that benefits people more broadly. And I think that's really important and something that we need to continue and do more of. To share some success stories with you, we have, for example, supported Currency, that is a regulated payments company, as well as Zilch, that is regulated credit firm that does BNPL-like products. In both cases, they tested through our regulatory sandbox. We provided kind of regulatory advice during that testing, and that enabled them to test their beta product and see whether it was something that would work or that might need a bit of tweaking, etc. And certainly Currency said that it enabled the fact that they tested through the regulatory sandbox, enabled the product to be brought to market that much faster. Similar story for Zilch, and you're probably aware that they are also now one of UK unicorns. From looking at the digital sandbox, that is our kind of newest product, if you like, we had an expo in April where a lot of firms that have benefited from the digital sandbox to date presented and showcased what they had done to an audience of people at our offices. For example, there we had FinTech that is essentially aiming to address financial inclusion and credit poverty issues by providing credit providers with enhanced risk detection tools that sort of goes beyond kind of credit ratings type of data and information. They used our synthetic data to test their model, enabling them to validate their proposition. We also had a Manchester-based RegTech firm that is called OneID that tested certified digital ID solution and how that could help with authorized push payment fraud. And then influence, we work both nationally and internationally, and we are currently the chair of the Global Financial Innovation Network, or GFIN, that counts around about 90 regulators now. It is something we created 5 years ago and is growing in importance. And the objective there is really to help driving collaboration globally, and the global picture is even more so important now than it was 5 years ago, arguably, especially in the space of innovation. So in 2023, we hosted the GFIN's greenwashing tech sprint that brought together international regulators and international firms and academias that developed solutions around greenwashing, or to fight greenwashing or identify greenwashing. There is plenty more examples, but I will wrap it up, given I can see the time has become red on my side. So I suppose our 4 focus areas this year are AI, financial inclusion, open finance, and tokenization. We've heard quite a bit about this actually throughout the presentations before me. From an AI perspective, we are working and developing an AI sandbox that we hope to launch soon. We are also working with the DRCF, so that's us and a number of other regulators, in a piece of research on deepfakes, and have just launched what is called the DRCF AI and Digital Hub for kind of innovators that have cross-sectoral queries around AI and digital, so that it's a one-stop shop essentially for all of us together. So I suppose you've guessed it, we have very little on, and we have little ambition. Of course, I am joking. So what's next? In a world of continuing change, and actually where growth and competitiveness are key, innovation is critical, and I think it is even more so. And we can see the kind of commitment of the new government, and therefore I think there will be more and more of emphasis on that in the future. And us as a regulator, it is critical that we strengthen that side as well, and we do more on this front. So looking to our 10-year anniversary, we are considering how best to evolve our own services, making them simpler and sort of ready for the future. And I would appeal to you all to get engaged if you haven't already, because I think, as Stephen pointed out earlier, with the clusters, it's a question of collaboration and working together towards a goal that should be common among all of us. And I think we as a regulator are a critical part of it, but we cannot be the only one, of course, and it only works if we come together. Thank you very much, and sorry for being very slightly late.
Morning, everyone. I'm Ryan, Marketing and Events Executive at FinTech North. Didn't get quite as dramatic an intro as Joe did, but oh well, maybe next year. That wraps up the first session. Hope you enjoyed it. We've heard from speakers from across the breadth of the national FinTech ecosystem, and then those sharing a bit of a lens on the Northeast FinTech ecosystem as well. Yeah, a great way to start, and hopefully you enjoyed it as much as we did. After the break, we're going to hear from Phil Vidler from FinTech Growth Fund, who's going to talk about funding to scale FinTech across the UK. We're going to hear from Roger Binks from Northeast-based FinTech Canny, who are going to talk about their scaling journey. We're going to have a fireside chat with MasterCard and the Office for National Statistics about payments data, and then close the second session with a keynote from Geller, who's sat in front of me here, about how the future of FinTech is not finance. So yeah, as I say, time for a networking break. We're going to be back in here at around 11:15. So grab yourself a coffee, some water, and yeah, enjoy some networking. We'll see you back in here. Thanks.